Good afternoon, everyone, and welcome. I call this October 28, 2020 special meeting of the NCUA Board to order. I want to note for the record that due to the COVID-19 pandemic, today's meeting is open to the public via a live webcast only. The public may access the meeting by visiting the agency's homepage and clicking on the provided webcast link. I'd also like to note that all participants in today's webcast are participating remotely. I'd like to thank the Office of the Chief Information Officer and our Board Secretary for all of their assistance in bringing today's meeting to fruition. The first and only item on our agenda today is Proposed Interagency Rule Part 791, Role of Supervisory Guidance. Staff presenting, Scott Neat, Associate Director, Office of Examination and Insurance, and Marvin Shaw, Staff Attorney, Office of the General Counsel. Good afternoon, gentlemen.
Good afternoon, Chairman. This is E&I Associate Director Scott Neat. Thank you and good afternoon to everybody, including Board Member Rick Waters and Board Member Harper. Marvin and I are here today to present an interagency rule which codifies the interagency statement we issued on September the 11th, 2018, clarifying the role of supervisory guidance. We issued this statement with the Office of the Comptroller in Currency, the Federal Reserve Board, the Federal Deposit Insurance Corporation, and the Consumer Financial Protection Bureau. To provide some background, the NCUA previously implemented many of the core principles of the 2018 guidance back in 2013 when we provided additional guidance and training to our examiner staff. At that time, we redefined and clarified the difference between an examiner finding and a document of resolution, or what we call a DOR. More specifically, we clarified that our examiners only issue a DOR to document enforceable problems. Enforceable problems are problems that we would be willing to escalate by taking one or more administrative actions. As the Board is aware, supervisory guidance is generally issued by the agencies and the NCUA to outline supervisory expectations or priorities, and to articulate our general views regarding appropriate practices for a given subject area. Issuing guidance also improves transparency and provides credit unions and our staff insight regarding supervisory expectations, which in turn helps to ensure consistency in our supervision and exam programs. In November of 2018, the OCC, the Federal Reserve Board, the FDIC, and the Bureau received a petition for rulemaking from the Bank Policy Institute and the American Bankers Association, requesting that they codify the 2018 interagency statement. They argued that such a rule is necessary to bind the agencies to the terms of the 2018 statement. Further, the petition further noted that concerns that the 2018 statement was not clear on how supervisory guidance is used in connection with matters requiring attention to what the banking agencies refer to as MRAs. MRAs are the functional equivalent to our DORs that we use here at NCUA. Additionally, the petition requested that the rulemaking should clarify that the agencies would limit the role of such actions to violations of statute, regulation, or demonstrably unsafe or unsound practices. Since NCUA has no supervisory authority over the financial institutions represented in the petition, NCUA was not a recipient of that petition. However, because the NCUA was a party to the 2018 interagency statement, and due to the benefits of providing additional clarity and codifying this guidance for the credit union industry, staff has recommended that NCUA join in this rulemaking on its own initiative. If adopted, the proposed rule would codify the 2018 statement and consequently confirm that the agencies will adhere to the limits of administrative law in carrying out their supervisory responsibilities. Additionally, the proposed rule would clarify that unlike the law or regulation, supervisory guidance does not have the force and effect of law as to not create binding legal obligations for our financial institutions. That concludes our prepared remarks. Marvin and I would be happy to answer any questions you may have.
Thank you, Scott and Marvin and all the other staff that works diligently on this rule. This interagency proposed rule reiterates the important distinctions between regulations and guidance. It makes clear that citations will be for violations of law, regulation, or noncompliance with other enforceable conditions. The proposed rule reaffirms that examiners may continue to reference, including in writing, supervisory guidance to provide examples of safe and sound practices, appropriate consumer protection, and risk management practices, and other actions when addressing compliance with laws or regulations. But most importantly, the proposal clarifies that supervisory guidance alone is not enforceable and does not carry the same weight as regulations or law. Gentlemen, I now have a few questions for you. As the NCUA continues to focus on providing regulatory relief during these difficult times with the COVID-19 pandemic, what impact will this proposed rule have on the credit union industry?
Thank you, Chairman. This is Scott. This proposed rule will not impose any burdens on the federally insured credit unions. Ever since the NCUA updated examiner guidance in 2013, which clarified and reaffirmed the difference between a DOR and an examiner finding, we immediately saw a sharp decline in the number of DORs being issued to credit unions. This proposed rule would codify and reinforce our long-standing internal policies. Back to you, Mr. Chairman.
Thank you for that response. Second question. Will this rule at all have a chilling effect on our ability to issue guidance in the future?
Thank you, Chairman. This is Scott again. No, I don't believe it will. As I discussed previously, there are enormous benefits provided to credit unions and our staff when we share guidance and clarify supervisory expectations. This is particularly important for our smaller credit unions, where employees are often required to wear many hats to keep their credit union running. Credit unions frequently ask for guidance from the NCUA on many topics, and those that don't appreciate the transparency that our guidance provides. For our examiners, our guidance has the added benefit of providing greater consistency in our examination and supervision programs. Back to you, Mr. Chairman.
Thank you, and I have one final question. Lamentably, there's been vast confusion in the press related to how NCUA works with other federal counterparts related to interagency rulemakings, and more specifically, how the approval process works when we are issuing interagency rules. Would you please summarize for our listeners how this process works and where we are in the process now for this rule today?
Sure. This is Scott again. The NCUA's Office of Examination and Insurance and our Office of General Counsel began working with and coordinating with our counterparts on this proposed rule late last year. An interagency working group was formed to coordinate the drafting of the proposed rule. This working group met regularly until they reached a consensus on what the rule text should look like. From there, the draft rule text was socialized with senior management internally within each agency. Based upon the feedback received within each agency, the working group continued to reconvene until a consensus was once again reached. That process continued until every agency was satisfied with the rule text. Once pens are down, every agency must formally approve the proposed rule at the board or administrator level. While we strive to coordinate the formal approval process as best we can, the timing is generally never simultaneous. It's also important to note that the proposed rules are not official until they are submitted to and published in the Federal Register. Interagency rules are not submitted to the Federal Register until each and every agency included in the rulemaking formally votes to adopt the proposed rule. Last week, the FDIC deliberated this proposed rule during their October 20th board meeting and voted to adopt it. In their role on the FDIC board, the OCC and the Bureau have also voted to adopt the proposed rule. We've also received confirmation that the Federal Reserve has voted to adopt the proposed rule. Chairman, as you know, we had tentatively planned to present this proposed rule at our October 15th board meeting. The Sunshine Act requires the NCUA to make public the agenda for each open board meeting at least 7 days in advance. Because we had not yet received confirmation from every agency that pens were down prior to publicizing our agenda on October the 8th, we had to remove it from the board agenda. But to ensure that NCUA can remain timely in our formal approval process of this proposed rule, we convened this special board meeting today to consider it. Back to you, Chairman.
Thank you very much for that response. And again, to reiterate, we do strive to work in alignment with our other peer regulatory agencies. And I think the fact that we're just a little over a week from having this finally in alignment with the others shows that we really have tried to honor that intention. So thank you for that response. I have no further questions. I'd now like to recognize Board Member Harper.
Thank you, Mr. Chairman, and I share your concerns on that. We are moving quickly on this matter. And thank you, Scott, for your presentation and Marvin for your availability to answer questions. As you have laid out, the matter before us this afternoon is straightforward. As such, I will vote for the NCUA to propose this joint interagency rulemaking along with the Board of Governors of the Federal Reserve, the Consumer Financial Protection Bureau, the Federal Deposit Insurance Corporation, and the Office of the Comptroller of the Currency. In response to a petition by banking trade groups, this proposed rule would codify in regulation the interagency statement clarifying the role of supervisory guidance jointly issued by the agencies on September 11, 2018. By codifying the 2018 statement in regulation, the proposed rule is intended to confirm that the agencies will continue to follow and respect the limits of administrative law in carrying out their respective supervisory responsibilities. The 2018 statement reiterated well-established law by stating that, unlike a law or regulation, supervisory guidance does not have the force and effect of law. The NCUA, as you pointed out, Scott, has long had a policy in place requiring examiners to tie documents of resolution to specific regulatory and statutory citations, and this regulatory codification will not substantively change the NCUA's existing examination program. We will continue to follow this practice if this rule is finalized as proposed. In closing, thank you again, Marvin and Scott, for your work on this matter. Mr. Chairman, I have no further questions.
Thank you, Mr. Harper. I'd now like to recognize Board Member McWaters.
Thank you, Mr. Chairman, and thank you, Scott and Marvin. As I've stated many times during my over 6-year tenure on the NCUA board, the agency should operate in a transparent and fully accountable manner where our rules and regulations are clear and unambiguous to all members. Administrative guidance is certainly helpful to agency staff and the credit union community. It does not represent agency regulation or carry the force of law, as it has not run the necessary gauntlet of the Administrative Procedure Act, where interested parties are afforded the opportunity to offer their comments, criticisms, and suggestions for improvement. We should never operate by conducting our examination and supervision oversight as a game of got you by relying solely upon administrative guidance. Instead, we should, in all instances, tie our administrative actions in an objective and fair-minded manner to specific provisions of the Federal Credit Union Act, final agency regulation, or judicial holdings. Thank you, Mr. Chairman. I have no questions.
Thank you, Mr. McWaters. Is there a motion?
Yes, this is Board Member Harper, Mr. Chairman. I move that the board approve proposed interagency rule, Part 791 of NCUA's Rules and Regulations for a 60-day comment period as attached to the board action memorandum.
Thank you. Is there a second to the motion?
Yes, Mr. Chairman, this is Mark McWaters, and I second the motion.
There is a sufficient second. All in favor, say aye. All opposed, say nay. All in favor, say aye.
Aye.
Aye. The ayes have it, and let the record show the motion passed 3-0. Thank you all for joining us at today's meeting. Now that this has been approved, you will now see us from the Office of External Affairs and Communications sign on to a joint press release from the principals of all the other agencies from the FDIC, the OCC, CFPB, and Federal Reserve. So thank you. That is the end of our agenda today. There being no further business, we are hereby adjourned.